How do you actually know if a company is making money or it's just looking profitable on the surface? Today I will show you how to check if a company is actually profitable step by step. If you're investing in companies like Safaricom, Equity, or KCB Bank, there's this one skill you must have, and that is fundamental analysis. But don't worry, we are going to break it down in the simplest way possible. First, you need the company's audited financial statement, and this you can get it through the NSE website or the company's investors relations page or the capital market authority page website. And you need to download at least 3 to 5 years of annual report. The second thing, we are going to check these financial statements and look at, first thing is revenue. If it is growing, this is really a good sign that a company is doing well. Then we are going to look at the net profit, if the company, to see if the company is actually making profit consistently. Then we will look at the net profit margin. This will tell us how much profit the company keeps from its revenue. Lastly, we are going to look at the operating profit. This will actually tells us if the core business is actually profitable. The third thing we are going to do, we are going to look at the 3 important ratios. Number 1 is return on equity. This tells us how well the company utilizes investors' money. Anything above 15% is usually strong. The second one is return on asset, and this shows how efficient the company utilizes the asset it has. The third thing is earning per share. If the earning per share is growing over time, that's a very good sign. The fourth thing we are going to look at is cash flow, and under cash flow we are going to look at 2 things, that is the operating cash flow and free cash flow. The operating cash flow should be positive and ideally close to the net profit, while the free cash flow, this is what is left after the expenses and investments. The last thing you're going to do is comparing the company with other companies in the same industry. Like, for example, you compare banks with banks and not a manufacturing company to see whether it is average or actually it's really doing well. To summarize, look for companies whose revenue are growing, has a high return like ROE, has a consistent profit, and a strong cash flow. That is how you identify a truly profitable company. If you find this helpful, make sure to like and subscribe, and I will make sure to show you a breakdown of a real company in the next video.